currencies. Hope you guys had your dinner. Okay, now I always start with this, where I say that, you know, I started my career as a dealer. So therefore, once you're a dealer, you're always a dealer, all right? So I will always begin from here. I started my career in Bank of America in 1983 as a trainee dealer, and then went on to Citibank as senior dealer, and thereafter as assuming roles as treasury manager and also HSBC private banking division. I left banking to be currency analyst and strategist with Informa Global Markets before semi-retiring in 2017. I'm now adjunct lecturer with a few institutions, and I also teach the Skill Futures Fundamentals of Forex Trading, Hedging and Risk Management course. During my time with the bank, I was also lecturing at the Institute of Banking and Finance, MAS, Bank Negara Malaysia, and a few others, you know, in the region. And because trading and training is my passion, I continue to trade for clients as well as for friends. I was featured on Money Mind several times, and I was also a panel speaker at several conferences. One of them, the latest, being the University of Essex and Kaplan Symposium on alternative financing in July. All right, so many more, but it takes too long to put in everything. So without much further ado, I will run into the what we're going to cover today. Now, before I start, I saw some new names there. Just put it on the chat, or if you want to unmute, just tell me who of you there are currently trading or thinking of trading foreign exchange. Anyone? Anyone there trading foreign exchange or thinking of trading foreign exchange? If you're currently trading, you can put on the chat and say, yes, I'm trading. If you are thinking of trading, you can put yes. Otherwise, sometimes, you know, when I talk, you know, sometimes you don't know what I mean, you know. So, and the reason why I ask is so that I'll know how to pitch. Somebody's going to say something. Options trading. Options trading in what? There's option trading in many things. Option trading in Forex. Option trading in stocks. Option trading in futures. Dennis? Do you do options? Equities, indices. So that means you have no foreign exchange exposure at all. Or do you have? Okay, since we are on the topic of equities and indices, all right. Before I go into the FX part, because you're trading options, so options is okay. Options is very safe. If you know how to use it, it's very safe, and you limit your losses. Your upside can be tremendous. Only thing about options is that you pay a premium, right? Of course, being an option buyer, if you're the option seller, you earn the premium, but you also carry maximum risk. All right. Whereas if you are the buyer, you are the owner of the option, you carry maximum profit, minimum risk. Your risk is your premium. So since we're on the topic of equities, but because your options, you're not buying stocks per se, I believe, right? We are. I told them on Sunday, I think we are very close to a stock market meltdown. And I use the word meltdown because this thing cannot go on and on and on and on. Okay, the party cannot go on and on and on. As you can see, the crisis, energy crisis is getting worse. The supply chain crisis is getting worse. So that has driven up prices. That has driven up inflation. So when inflation starts to go up very, very fast, last Sunday I was talking about, or 2 weeks ago I was talking about stagflation, right? We may have that, where there is no growth, because make no mistake, the world is slowing down a little bit. People are too optimistic, you know, with all the pandemic, with all the situation going on. Everybody think that the world is going to grow until, like, you know, nobody's business. But I think it's not right. Once they do the tapering, once they start to increase interest rates because of the high inflation, then I think you're going to see a meltdown in the stocks, right? Within 6 to 9 months, I'm quite sure of that. We will see a meltdown. Meltdown means more than 50%. Stock market collapse, crash. Okay, it's gone up too long, too far, with just free money from the central banks. There's no economic fundamental. If you realize, you know, the pandemic last year, this year, end of 2019, we have grown very little actually. But look at where the stock market is. Every few months, every few weeks, you have record highs, record highs, record highs. This one cannot maintain. There's nothing there. There's nothing to make record highs. There's no growth to speak of. A bit here and there. You know why it's a bit here and there? Because every time people get locked down, when the market gets back on its feet, people go and buy. And then they get very optimistic. Oh, demand has gone up. Oh, retail sales has gone up. But this is just a pent-up demand for a while because people have locked down. But once the whole thing is more or less open up, when they have vaccinated 80% of their population and they open up the economy, this economy is not going to run anywhere. It's going to be so stale because over the last 10 years, they have been so addicted to free money that when there's free money, there's no more free money, they cannot grow. Okay, that's how I see the economy. So there it has to be a reset button, right? You have to press reset for it to go again. That means property has collapsed like 60%, 70%. Stocks have to collapse 60%, 80%. All they have to collapse before the world can grow normally again. Right now, it's not normal. It's abnormal. It's very abnormal. And why is abnormal? Because the central banks make it that way. The central banks don't want to lose their job, so they keep on printing and printing and printing so that the world does not collapse. But what are they doing? They are just delaying the inevitable. It will collapse. It's a cycle. All right. The central banks nowadays think that they're so clever, you know, they just print, and then the market will continue. Yeah, the market will continue 1 year, 2 years, but ultimately it will collapse. All right. So Dennis, you are trading options trading, you're okay, you're fine, as long as you don't go into the actual stocks. All right. Well, you can, but why do that? Unless you're very bullish. Okay. You buy stocks and then you sell the option cover. That means initial, of course, you have to buy. When you buy the stocks, you have to come out the cash, and then you sell the option cover. All right. That means you sell what you call it. You see, my sometimes memory not so good. A call option. All right. You sell a call option to cover your actual stocks. But why do that? Unless you're very bullish. But to be bullish, well, but to be bullish at this point in time, I think it's not very, very right. All right. I mean, this is my call. This is my view. It's late in the game, really, too late. All right. All the big guns, so-called big guns, they're all out of the stocks. Most of them, if they're in, maybe 5% or less of what they have, Whereas they just sit around and they wait for it to collapse. All right. It's the small fellas that go at the end because they get so hyped up, they buy and then they get caught. Okay. So now I know there's only one. So the rest don't do forex. Okay, never mind. I will still do forex because I think this is the market. Once the stock market crash, then people will run into forex. So it's a good time to actually pick up a skill, forex skill, so that when the stock market, collapse. Of course, when you do options, when you do futures, when stock market collapse, you can still sell. You can still sell short, no problem. But it's going to be quite hairy and quite volatile because when things start to drop 5%, 10%, 20%, 40%, there is in between there a relief rally which may catch you by 5, 10, 15%, and it will wipe out your margin. All right. So I still believe if you do foreign exchange, I think it's over the next 2-3 years, I think it's a much better call to me personally. All right, I'm biased, okay, because I'm more a forex person. Okay, continue. Okay, today the RBA, or rather yesterday, sorry, they kept rates, they stay pat, they kept rates as this, a little bit dovish, all right? But of course, Aussie stayed quite resilient. In fact, today Aussie went up to near 73.00, 0.7300, but it has since turned back down, all right? While at the same time, the RBNZ today hike rates, right? RBNZ hike rates by 25 basis points. Okay, they said that it is appropriate to continue reducing the level of monetary stimulus. They also said that headline inflation is expected to increase above 4% in the near term. All right. So can you see that inflation 4% is very high, okay? But the economic activity will recover quickly as alert level restrictions ease. So the government, the consumers, everybody think that once COVID restrictions are over, it's fine and dandy, the market will go back, things will go back to pre-pandemic. I don't think it's that easy, okay? This virus is a different kind of virus. Okay, now the RBNZ also noted that business and consumer confidence remain robust during the lockdown. It's robust in the sense that people still buy. I mean, you look at Singapore per se. I mean, our retail sales went down. Okay, last month a little bit, but because people still need to eat, people need to buy things. So in a way, it's a bit robust, but not your full-fledged growth because after COVID or after when the central bank starts to take money off the table, then you can really see the real economy. Okay. Now you cannot see. Now it's not the real economy. Now it's, for one of a better word, it's not so nice to use this word. It's a BS economy, all right? Because it's all driven by free money, cheap money. All right, the US printed about $10 trillion. I mean, you print 10 trillion, of course, it will drive everything higher. The European Central Bank printed about 6 or 7 trillion. Japan printed about 5 trillion, equivalent of US dollars. So you have a total of about 20 trillion in the world. How not to go up? Because assets are limited. You have limited stocks, you have limited commodities, you have limited gold, you have limited silver. So eventually, buy and buy and buy, cannot buy anymore. What go up? Prices go up. Okay. But what I'm going to say about the Kiwi is that it has retreated a little bit, all right, because of this thing called buy the rumor, sell the fact reaction. But since the market is not so long, the Kiwi just now went down to about 68.75. Now it has jumped back up to 69, 15, 20. I believe we will see a bounce later. All right. Later meaning next couple of days, 2-3 days, 1 week. Why? Because since this is the start of several more hikes in the next 6 to 9 months, it should make the Kiwi more attractive to investors. Investor wouldn't want to buy currencies that have interest. They don't want to buy currencies that have no interest, right? Ultimately, all right, this is the fact of life. If you are an investor, if I want to buy yen and I have to pay the bank just to keep the yen, of course I will not buy. I'm not so stupid, you know, right? If I have to go to Germany, buy euro and place euro in a bank and also pay the bank at the end of 6 months, from my 100,000 become less than 100,000, of course, it's sheer stupidity to do that. So people will not do that, all right? Eventually, they will run away and they will find yield. Where to find yield now? Kiwi dollars. Okay, Kiwi dollar is the only currency, all right, at this moment, paying interest. The rest, zero interest, almost zero interest. So if the New Zealand continues to hike over the next few months, up to 1.5%, that is a near-term target, of course, people will run into Kiwi dollars. So if you buy Kiwi and you hold it, this is my own view, you are going to make good money, all right? Of course, you're a trader in and out, doing technical analysis, charting, you can do that, no problems, you know. But I'm a bit of a longer term trader because of my age, you know, I cannot trade in and out anymore, all right? It gets very, very tiring. But if you are younger, you want to do that, you can. But trade from the long side rather than the short side. This is what I believe in.